Oh, yeah. Hi, Michael. All right. Let's hope that I have a voice today. Just give me 1 second. It takes. Okay, just want to make sure it's not actually painful to listen to me today. Today I want to give you an introduction to advanced Fibonacci time and price analysis. And you've probably seen my work if you've seen it at all on ElliottWaveTrader.net. And also, if anybody's familiar with the book, I did write Fibonacci Trading that came out in 2008. So it's been around for a while. I know that at least some of you have grabbed that. But anyway, let's get started. I'm going to start with some of the basics as far as the Fibonacci work is concerned, and then we'll get into some more interesting setups as we move forward. So the question, people usually ask is, why should I use this type of Fibonacci analysis? And it's because it enables you to identify high probability, relatively low risk trade setups where the risk is clearly defined along with the targets. Okay. Now, this works on pretty much any time frame and essentially on any good market data. The only times I don't really use it is if I don't have enough back data, or if it's something like a penny stock and it just, doesn't have any pattern to it. We won't be able to do anything with it. But pretty much everything else, I mean, we definitely look at stocks, ETFs, futures, Forex markets, and I also do some crypto here and there. So also, it's an excellent methodology to use with options strategies, okay? Because that's kind of where I came from. Everybody was kind of using options. Obviously, you can also trade futures, but it's great for options. And also with this method, you can see things in the market that you will never see using indicators alone. Okay, so I think you've already seen some of these, Fibonacci numbers, but again, just want to kind of go over the basics as far as how the number series forms. You're going to take prior two digits like 5 plus 8 gives you the next number 13, 13 plus 21 gives you the next number 34. But we don't actually use the Fibonacci numbers in the analysis. We're actually going to use the ratios derived from the number series, okay? Because this will go out to infinity. But what you'll notice in between the numbers is basically the golden ratio, okay? So let's say, 13 times 1618 will give you pretty much the next number. Take that number, multiply it, you'll get the next number. Okay. So the golden ratio is inside of these actual numbers. Now, the ratios that I use that are derived from the series that are used in this analysis are 382, 50%, 618, 786, 100%, 1.272, and 1618. Okay. Well, that's a whole lot more than just the 618, but everything is mathematically related to each other. Now, also, if I have a very long swing, strong swing, um, I will sometimes use 236. I use 2618 as my target three for my trend trade setups. And then every once in a while, you get a really big runaway market. Sometimes I'll just run that 4.236. I know it sounds crazy, but if you apply it, you will also see where, the market will turn around that ratio. I don't use it very often though. So I told you where the 618 and 1618 comes from. It's in between the numbers. But as far as the mathematics, again, just to show you that they are mathematically related. 1 minus the 618 is going to give you the 382. Or if you just try the square root of 618, you'll come up with 786. Square root of 1618 is 1272, and so on. But they are all related mathematically. So let's move on to, well, I'm going to go through three different types of, price analysis that I use. I mean, it's basically Fibonacci price retracements, Fibonacci price extensions, and Fibonacci price projections. So we'll go through those three and then we'll put it together as far as, how I like to use this work. So for retracements, basically what we're doing is we're measuring a prior low to high and then using the retracement ratios to look for potential support. And if you're going the other way, high to low, you're using the same ratios to look for potential resistance. So I'm going to go through a couple of examples. Okay, so this is a daily chart of Square. I ran a retracement of a major low to high swing, and you can see it didn't really get a reaction there or here. But in this case, we did hold the area of the 618 retracement, 4505. Okay, it wasn't a perfect hit, but absolutely close enough. You don't want to try for perfection, otherwise you'll never do some of these trades, okay? But that is absolutely close enough. It hit, it held. You had a nice reversal back to the upside off of that one retracement. Now we're going to go over which retracement is best to use. We will get there soon. Here's another example of a retracement. This is a 30-minute chart of AMAT, taking a prior high to low swing. Again, run the retracements. Well, we did see a little bit of a movement off of this 382 retracement. You saw like a micro pullback after the 50%, but again, in this case, the 618 ended up being pretty powerful. So we don't know which of these zones, will hit and hold. So there's, again, a way to identify areas that are a little bit higher probability to trade against. And we will get to that. All right, so next, let's look at price extensions. So price extensions still only use 2 points on the chart, a low to a high or a high to a low, okay? And so you're typically using the price retracement tool and you're just adding the extensions of 1272, 1618, and then of course I add my 2618 for my third target for the trend trade setups. But in this case, again, if you're looking at an extension, we're going to take a prior low to high swing, and it's essentially a retracement beyond 100%. But we'll run the 1272 of that low to high, look for possible support, 1618, possible support, 2618. Again, I put that for my third target when the market moves nicely. And then we have, again, just the flip side, measure any high to low swings using 1272, 1618, 2618, and we're looking for possible resistance in those cases. So I do want to give you a couple of examples before we try and put it all together. This is a daily chart of Facebook, okay? And here is where there's actually two examples here. I measured a prior high to low swing. And notice that twice when we got to the 1272 extension area, we did see, a pretty healthy move off of that area. Typically, I tell people, ratchet up stops when you get to extensions because many moves tend to terminate, if only temporarily, at those extensions. Okay. So, so there's two hits there before we ended up blowing through this next one. And then we had another high to low that we measured. And we didn't really have much happen at the 1272 extension. We kind of blew right through it. But we did hit pretty closely to the 1618 extension that came in at 184.10. It looks like the actual high was 184.25 if my eyes are seeing correctly. But this is where, you did at least get a reversal around the area of the 1618 extension. That was a drop of $15.24. Okay, so those are extensions. Okay, another example is, sorry about that. Okay, so in the case of Intel, this is a daily chart. This is where I measured a prior high to low swing, ran the extensions. Didn't see anything at the 1272, but at the 1618, we did see a pretty healthy reversal. Looks like the extension came in at 50.85 and the exact high was 50.85. But remember, in this case, it was a perfect hit, but don't assume that you're going to see it like that every single day. Anytime you get close to an extension, though, just remember to ratchet up stops. All right, now we have price extensions the other way. This is it is definitely an old example, but this was CMG, a weekly chart. And when this market was going straight down, what did you want to know? Well, when might we make a low? So I did run the extensions and nothing happened at the 1272. It may have stalled for a few minutes during the day. But as far as the 1618 extension, that came in at 262.71. Now, not a perfect hit, but the actual low was 263 even. And even though this doesn't look like it was much of a rally, this was a rally of $82.88 off of that extension. Okay. So I always watch price extensions for possible termination of moves. All right, next we're going to look at the Fibonacci price projections. This is where you come from using 3 points on the chart. And here's where I'm going to measure prior low to high swings, project from another low for possible resistance using 100% all the time, sometimes 1618. Okay, some other people will use like 1382 or 1272, but this seems to be enough as far as, when I'm looking for setups. So low to high from the low for resistance, high to low from another high for possible support. So let's go through a couple of examples of this on a chart. This is an old chart in crude oil. And here you're looking at, general pattern of higher highs and higher lows here, right? So one of the things that we like to do is use the projection tool to help get in the market within the direction of the trend. And what we do for that is we use all of these prior high to low swings. Okay, I'm not sure where that sound came from. Okay, anyway, so here, what we did in this case was I measured, and we would have done these also. We measured a prior high to low, okay, which was $3.12, projected that from the next high when it started pulling back. Okay, and that gave us 55.87 for possible support. And the actual low was 55.88. Okay, so basically, within a penny, it held from a simple symmetrical projection, and we saw a very healthy rally from there after that. So that's an example of using a projection. This next example is on a 60-minute chart of Google. We have a prior low to high swing. We projected 100%, and then after we went beyond 100%, I also projected 1618. So in this case, this did not, stall the market. We actually gapped through it. But when we got to the 1618, it was worth knowing it because, hey, there's resistance. You don't know if it's going to stop the market. How about you just ratchet up your stop? And then, if it does shift patterns, then the market takes you out. But in this case, the 1618 projection did cap this move. And again, these levels, there are going to be days where the market just blows right through them. But you have to watch and see when the market takes a pause with some of these setups here. All right, this next example is also a projection. And this is S&P futures. It's a general pattern of lower lows and lower highs. So at that point, if we wanted a trend trade, we're going to look to set up the sell side. Here, you can see that there was a prior rally within the downtrend of 91 points. If I projected it from this low, gave us 30.97. The actual high was made at 30.96 and a quarter. Okay, so this was 90 and a quarter points versus 91 points. I call that symmetry. Okay, so the definition of symmetry, related to the markets is similarity or equality when comparing swings in the same direction. And then we would keep doing the same thing until it doesn't work anymore. Because eventually, it's going to shift back to higher highs and higher lows, most often. All right, let's look at one other projection. This was actually Bitcoin continuous futures. I just don't have the other data anymore. But we do have, let's see, we've got a prior low to high here that was 15,750. Another low to high here that was 17,190. I projected both of those because, you want to compare those rally swings with another rally swing because they tend to be similar. And then this one ends up being very similar to this first one at 15,835. Okay, so we had basically these two were very similar. And, it gave you a big heads up that there was resistance and there was a drop of, $12,000 from that. So that was a Bitcoin example. Let's see what else. Okay. And then what I want to go into, there is not a fib extension tool. It is just part of the actual retracement tool. Okay, I'll just answer that question real quick because here, for example, this is what I'm using. This is from my mentor, Robert Miner. I use the Dynamic Trader software, but here's the retracement tool. Okay, so with the retracement tool, here are all the retracements underneath 100%, but then it's the same tool and it will also give you the extensions as long as you add the numbers 1272, 1618, and 2618. Okay, so it's, yeah, it's still, 2 points, but it's beyond 100%. All right, so we're going to go into what I like to call a very powerful trade setup. I use it every single day. I actually use only 3 setups. One is a Fibonacci price cluster. The other one is a symmetry setup, which is just when you have those 100% projections, especially in the direction of the trend. That is a setup. And then the third type of setup is a zigzag or 2-step pattern, but it has to have specific ratios. And honestly, I haven't seen very many of them recently. So there might be an example here or there, but I don't know if I have one for this presentation. But as far as the definition of a price cluster, it is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. And we're going to start with pretty much a blank chart. So this is Tesla. So what would have told you to be a buyer in Tesla around June 5th? And, I, I mean, some people usually guess, but it's kind of a trick question because I'm going to show you everything. So here, there was a reason. One of the first reasons was this projection of a prior high to low swing that was $94.89. I projected it from this high. This ended up being similar at 94.50. So there's one projection by itself. Now you could have used that by itself for a trade because it is a symmetry projection. But I always like to see what else is there because if there are more price relationships, it's a stronger setup. So here's the next chart. I mean, same one, Tesla. It's a daily chart, but here's another price relationship, prior low to high swing, 618 in time, or sorry, 618 in price, 272.87. Actual low looks like 273.21, but that was the second price relationship. Third was actually a 2618 extension of a low to high swing. That came in at 272.62. It was the 2618. Again, right on top of those other price relationships. And then there's one more, or at least one more. We had another prior high to low swing that was very similar. That was $92.29, projected from this high, $94.50. Okay, so that gave us, another projection, and this could have been used as a setup by itself. But we want to see it all together. All right, so this is what we have. We have these prior swings, all projected from here. We have the retracement, and we have the extension. Gave us a price cluster at 272.82 to 275.42. It included 3 100% projections, a 618 retracement, and a 2618 extension. It hit. The actual low is put in at 273.21. And we saw the initial rally. That was $84.33. And our first target would be up here. We don't always meet the targets, but we always shoot for them. All right, let's see what else. I might have missed one of those projections. I have to go back and check. Anyway, here's another big old cluster that was pretty helpful in S&P cash. A lot of times the futures contracts just don't have enough back data to give me this type of, information. But here we had, a prior high to low swing projected from a high, a low to high swing extended. There was a 1272 extension. And then there was also a 50% retracement of a low to high. That zone came in at 48.19 and a half to 48.39.60. The actual low was made directly within that zone, 48.35. Okay, so it held. When we did pull back into that area and then we started to trade above it, start seeing buy triggers, at that point, you're able to run this target. Okay, so you didn't have to see that, but you knew that the potential target in the bigger picture was this. And we've met that target. Okay, I haven't updated all these the slides just yet. Okay, another example of a price cluster. This is a daily chart of NASDAQ futures. Here, we measured a low to a high, projected from a low. Measured a high to low. We have a retracement, probably the 382 of one, 618 of another, and a 1618 extension of another high to low. So this became another cluster. So when we rallied into this cluster zone, we knew that if we couldn't get through it, that you can go down to a lower time frame chart and look for some sell triggers. Okay, but this was a huge decline off of a daily setup zone. Okay, 16,460. Took a while, but we got there. And then let's see what else we've got. Another example. This is in NVIDIA. I know that's another favorite. And here we had a major low to high, 618 retracement, another low to high. We had 1272 extension. And then there was another 100% projection, but it was from this high to low, projected from here. Okay. And that gave us support. And you can go back, because these are weekly charts, so you can actually go back and do it yourself. But 86.31 to 86.93 area was the support. It held, and well, where's my current chart? Let's see. Let's see if it's all my weekly. Okay, yeah. So yeah, we met target number one, which was the 1272 extension, and target two off of this low comes in at 194.23. All right, let's look at a couple more examples. This is another cluster. Again, I'm taking all possible retracements, extensions, and projections that make sense to the current market at that time. So, what I had to work with was a lot of these prior swings, highs to low projected from this high. These were both similar. Okay. Then we had a 618 retracement. I know we had a 1272 extension in there, and another retracement here that was probably the 382. So with two 100% projections, a 1272 extension, a 618 retracement, and a 382 retracement, came in at 57.47 to 59. Actual low was made at 57, 56 and a half. And initial rally was, I guess to right here was 251 and a half points. This is off of 120-minute chart setup. These are one of the charts that we do every single day in the trading room. All right, let's see what else. Okay, so that's pretty much all about price work. But what about Fibonacci timing? So I know that there's some of you that are not familiar with timing yet, but we use the same ratios that we use on the price axis of the market on the time axis of the market. Okay, so for example, I'm going to measure the time between a prior high to high swing and then multiply that time by the ratio and project the results in the future. So let's say it was 100 days and you multiply it by 618, and then you count forward by, the bars, and then that gives you a point on the chart. And then what we're doing here also is we're looking for times when we have the timing factors coming together. Okay. So also when time and price come together, these are some of the best setups. So here's an example of, so this was actually the June 5th low that we had done the example on in Tesla, right? Here's where I added a timing histogram. So this is where I will measure the prior or identify the prior swing highs and lows that I want to use in the analysis. And then the computer just, spits it all out, runs all of the, um, all of the relationships there and does the math, and then spits this out and says, okay, this is a higher probability time for a change in trend using timing factors. Okay, so the 5th through the 7th was the highest scoring dates here on this histogram. And that came in at the same time that that support came in. Okay, so that's where you had time and price come together. I'll give you a few more examples in timing work. Oh yeah, this is what it looks like inside the program. This is, again, the dynamic trader software. And basically, I had projected from the last high, and then you can see where these highest scoring dates come out. And that's what I label on the chart. Okay, so it told me 6.5 to 6.7. You can see the higher scores. You can see the actual highs and lows that it did the math from. Okay, tells you exactly where it comes from. And then, we put that together with the other work, and it's not 100%, nothing's 100%, but we are able to identify, key time and price decisions. As far as Facebook, this is an old example of a price cluster that I had, this 332, 334 area. But what I wanted to show you was on top of that, we also had timing. So I had a high to high cycle. 618 came in July 19th. Then I have a low to a high that comes in on the 20th. A low to a low comes in July 19th. And one more low to low that comes in July 21st. So timing was the 19th through the 21st as we traded straight down into support. All right. So when we had time and price come together, then it was actually a higher probability trade setup because not only do you have the price coming together, you also had the time coming together. All right, here we go. We have another example of a histogram that showed timing in S&P cash. And this was February of 25. Basically, I had projected from this last low for the next possible high. You can see the histogram. I labeled the dates to watch for the possible reversal. And again, these dates don't always produce a reversal, but it does often enough that it's worth watching. So in this case, we had the 19th through the 21st. The actual high was made on the 19th, and you can see we had a very, very healthy reversal. And if you had that heads up, I mean, you probably would have gotten up closer or gotten out closer to here rather than down here. And then this is what it looked like on the histogram. Okay, here's the standout dates, the 19th through the 21st. And you can see that visually on the chart. All right, I think, let's see. NASDAQ cash. Okay, another one, and I've labeled these. Again, you can go back to chart, you can work with, even Thinkorswim has timing on it. But here I measured a high to high, August 22nd, another high to high, August 22nd, another high to high, August 23rd. And then I had a low to low, August 23rd, and a high to low. So that was this high to this low. 786 came in on August 23rd. So we had the 22nd, 23rd. Market was going straight up into it. But notice that, we had the timing. And this was, using the outright timing rather than the histogram, which uses calendar day projections. The regular outright timing uses trading day projections. Okay, it doesn't include the weekends. So here, not only did we have the grouping of time cycles, we also had price resistance, a 786 of this swing, and 100% of this low to high projected from this low. Again, we had time and price come together. It hit the zone. Initial decline was 1537 in NASDAQ. All right, let's see. I think I have one or two more. Okay. S&P cash daily, another one. High to high cycle, July 16th, another high to high, another high to high, got 16th and 17th, low to low 18th, low to low 15th, low to low 16th, low to low 17th. So 7 cycles between the 15th through the 18th, market was going straight up into it. And when you're using the cycles, you're looking for a reversal of whatever the market is doing into the zone. So we went up into the zone. So we were anticipating a possible reversal. We didn't know if it was going to happen or not, but in this case it did. And I think, yeah, actually that was my last slide. So I think I went through it relatively quickly. So if you guys have any questions, please let me know. And I may be able to go back to a chart if you had a question about an earlier chart. Oh, okay. There was a question about why not use the fib extension tool. Here's the thing. The fib extension tool in Think or Swim is the three-pointed tool, which is different than what it's called in my program. The three-pointed tool is called the projection tool. So it doesn't matter what they call it, but if you're going to run what I call a price projection, you do want to use what they call the extension tool that allows you to choose 3 points on Think or Swim. So that's where it gets confusing, because a lot of the other software packages, call it an extension, and for me, it's a projection. All right. Well, I don't see. Did I miss any questions? Yeah, yeah, it's definitely confusing if you're using a, different software. It seems to depend on, which one we're looking at. I think NinjaTrader might be different, might call it something else than Thinkorswim. Okay, so no questions? Explain price clusters. Okay. Again, it's the coincidence of 3 or more Fibonacci price relationships that comes together within a relatively tight range. This is a price cluster right here because it has at least 3 levels that come together within a relatively tight range and it identifies a key support decision. Thank you. Okay, so there's a minimum of 3. And again, that's just for the clusters. Now, it could be 3 retracements. It could be a retracement, an extension, and a projection. It could be any combination, but it needs to be 3 to be called a cluster. But you can use, again, symmetry by itself, which is just 3 clicks of the mouse, like click, click, and click, and you come up with the symmetry support. So you can kind of play with that and see how, you have swings that repeat themselves over and over again. All right. And I mean, oh, you know what though? If I have a little extra time, I can go through a couple of the charts that I have or just other examples if you want. Does anybody care about that? Because,
Yeah, that sounds great. You have another 20
Okay.
minutes almost. So,
Yeah, I just, was trying to get ahead of my voice at that point. So this is an example. So this is in my setups right now. IWM. Okay, so um, I'm not sure I have that other one. Let me check. Okay. All right. So here, for example, we have a triple cluster between 236.69 to 237.47. Okay. We put in a low at 237.55, which is absolutely close enough. 47 versus 55, that's nothing. And did it trigger? I know it triggered at least on a 1 minute chart. So far, we've seen a rally of, let's see, 413 off of this support. Now, if we get the full move off of it, I'm looking for 249.79 as a target. But there's a big hurdle on the way up that comes in from taking this low to high, projecting from this low, and a 618 retracement up here at the 243 area. But if we push through it by a decent margin, then we're more likely to continue higher. And um, we do have the averages on the right side for the bulls too. Okay, are there similarities by years in terms of clusters? I'm not sure what you mean. I mean, I do these on multiple time frames, and I was just showing you a couple of examples here. Like this is one of the zones that, well, this actually hit yesterday. This is a 120-minute chart. This is one of the charts that we look at every single day or having, showing in the trading room. So we have a lot of futures traders in here, um, basically tested this zone that also had timing for low. And it doesn't look like a huge move, but let's see. Oh, computer, don't give me troubles right now. Let's say it at least had a rally of 325 off of this area. Okay. Now, in the bigger picture, if we can push through, we do have to watch areas of resistance on the way up for a possible failure because of the recent action. But if we can push through it, then we still have those upside extensions on the chart. Same thing that I'll have on, the daily chart in this case. And there was another, well, this was an old one. I have a friend that works for Intel. So I went ahead and did a chart for him a couple months ago. And I mean, I had no idea. I just kind of looked at it because it's not one that I look at all the time. But here was a price cluster of support that came from, multiple different uh, price relationships, whether it was a extension of one of these swings, there were projections of this swing, another extension of this swing, and that gave us a pretty healthy support back here, and you're finally getting a move off of that area right here, right now. Um, we also had somebody had me look at Fang the other day. One of the things here, we did hold this area of support beautifully, but then what you need to do is you've got to know what your potential target is. So if you're running, if this was your setup from this swing, that would give us a target one of 154.42. But there's also another larger swing. So we're also going to run that for another potential upside target. So grab the high to the low. Wait, this was the lower low. And then these would be bigger picture targets off of this larger swing. So that was thing. Um, we have one in I looked at for another friend was VLO daily chart. Here's where I had a prior high to low swing, and we also would have projected this, but it came in lower. But this was very similar. So here's symmetry, 24.47 versus 24.34. And simple symmetry, all you needed to do was click, click, and click, and you would have had this level at 130.65 for possible support. And then, if it holds its own, you go down to a lower time frame chart and look for a buy trigger. Um, did. What else did I have? Yeah, this was a real old one. Well, old in that it was what, 3, 4 weeks ago. This was in JP Morgan. Cluster came in at 291.10 to 291.71. And if we start to pull back, we'll run the pullbacks again and see if we can find a new entry. But right now, we would just be trailing up a stop. And let's see, what else did I have? Oh, USO is interesting because we have a lot of resistance from some of these prior swings here. Well, 78.25 to 32, and then or you can look at this as just one wide zone, 78.25 to 79.08. But we have two symmetry projections, a 1272 extension, a 618 retracement, and a 786 retracement. So that's, yes, we look for resistance there, but I would definitely set up the buy side again. I mean, we basically, run the projections of these prior two swings or anything else that we have in the past that makes sense. Like I can even use this one over here. And run those retracements. I can also run, this low to high, this low to the highest high, low to the highest, and then this one. And then again, we see what else might cluster, with these other areas. So one of the clusters is going to be right here, 76.05 to 76.35. That becomes a cluster. Then there's another one down here. We have the 618, 50% and 100%, and so on. So, constantly every time it makes a new high or low, we have to run new levels. We did have a buy decision in Roku here, and it hit and held, and this would have triggered. Let me see if I can grab the other chart here. Roku. That's the daily. Where's the 15? Yeah, like Roku, hit that support. And here it would have triggered on a 15-minute chart for a swing trade entry. So you could be long and have a stop underneath there. Potential target one is 105.29. Okay. And even if you used a smaller time frame chart, 1 minute, 2 minute, whatever, you would have seen, some buy triggers against this area. So you can also use, even though it's a daily setup zone, um, you can also use it just for day trading, but you're not going to stay in it if you buy it with a 1 minute chart. You're not going to stay in it overnight if it doesn't also cross on the 15. Dynamic Trader is not a free download. It is, last I checked, it costs about $1,000, plus you have to pay for the data source. So yeah, I've been paying eSignal for many, many, many years. But that's Roku. Let's see what else we have. We do have support coming up in Meta, but the only thing I don't like about this one is that even though it is a support decision and it could trigger an entry, it's not going to be as high probability because the 513 is crossed to the downside here. And you're also below the 50. The setups are better when on the daily chart, the 250 simple moving average is on the right side and the 513 EMA combo is. And it is not in this case. So it's still a setup. It's just not the highest probability setup. Roku, on the other hand, would be, well, if I could see the other 200 underneath here. This looks like it's a royal setup because we should be clearly above the 200, simple moving average above the 50, and then here's the 5 and 13. The 5 is above the 13, so that's bullish. And if you look at, for example, S&P cash on the daily chart, and you just look at the 513 EMA combo, and you say, I'm going to wait until I'm on the right side of that, or I'm going to trade on, what it shows me. So like here, when we cross to the downside, the 513, better to look at the sell side. Okay. Now, yeah, you might get a little bit, stopped out here or chopped up a little bit there, but then it's right back to the downside. When we finally crossed back to the upside a while back, and also in I guess a little bit later on, we would also be above the 50 and the 200. But notice how the whole time this did not cross except once there was a little micro bust of with the crossed over, but then it went right back into a buy mode with the 5 above the 13. So right now, with all the averages still on the side of the bulls, of course, I'm going to continue to set up support within the daily uptrend using some of these prior swings, doing the symmetry, running retracements, or retracements like of a prior swing, and then also extensions. And that's what we're doing. We're, just setting up all these charts all day long. I believe I did a video on YouTube. I do have a YouTube channel where I do about 4 or 5 minute videos, and I go through some of the examples so you can see exactly how, I do some of this stuff. Oh, do I prefer the Fibonacci indicator than other indicators? Well, I started many years ago in Chicago on the trading floor when they used to use paper charts. So I'm aging myself at the moment, but yeah, we used to I did the basic class for McGee and Edwards at the exchange, and that was basic technical analysis. And I liked it and I looked at it. But once somebody showed me the fib work, I pretty much threw almost everything else out the window. So I wanted to use Fibonacci for my base work and look at things like moving average crossovers for triggers to, you know, to trigger somebody into a trade setup. Oh, I'll see if there's something here real quick, but then I'm probably there's probably somebody after me, is my guess. Oh my God. Is this open table? This is a daily chart, right? Yeah. Well, in this one, we're very clearly above the 200, above the 50, 5 and 13 still in a buy mode. I do not think that I'm going to have any symmetry here because, yeah, we went through that already. But what I would be able to do is run some retracements and maybe extensions. So here's retracement, the low to the highest high, higher low to here, higher low, and there's one more here, higher low to the high. So let's get rid of this because we are through it. If we're through it, it doesn't have any value. Like I said, I don't have any projections I can run because, yeah, I just don't. And if I run this extension, let me just test that real quick. If I run this low to this high, now we're kind of through the 1272 and the 1618. So all I'd really have there is you have a 50%, a 786, and a 618. So yes, this would be a cluster. So 660 to 697 is the cluster zone. Your risk definition is either underneath the low made prior to your buy signal, which would be here, or underneath the low end of the zone, which would be underneath 660. And target one would be 1195. Target two would be 1332. If it went even further, then target three is 2618. Okay. So I think I will let the next person get set up. I hope you enjoyed some of what I shared. Um, and feel free to come and check out you can do a 2 week trial in the trading room without a credit card. So I believe that the link has been up for that. And thank you for joining me. And if you have any questions, should I pass on my, well, you should have that one link there. I am going to give you, this is probably against the rules, but can I give my email address?
Oh yeah, yeah, you can
Okay, but this one
share whatever
and
you want.
and this one ages me, so uh this is so bad. I used to have one of those startup modems.
Mhm.
So yeah, if you have any questions that come up after this, or if you want maybe a copy of the PowerPoint, just please let me know.
And for everyone listening to the recording, I'll just read this cb1618@aol.com.
Yep,
Oh, all right. Thanks, Carolyn.
you're welcome. Thanks for having me.